Hello everyone, welcome back to the channel. CoreWeave is down 50% from the highs. Let's talk about what they do, the bullish case scenario, the bearish case scenario, and at the end, I'm going to give you a very good technical entry on this stock where if the fundamental side holds, the stock will reverse instantly from that zone. So stick around for that, but let's get started and talk about why CoreWeave is down 50% on the year. Their revenue has been growing over 100% year over year. They have about $100 billion in backlog contracts. Their debt is increasing and they're sitting at about 22 billion currently. The last high we saw in the stock was roughly around 155, and today, give and take, sitting at around $73, $74. What does CoreWeave do? CoreWeave is a NeoCloud. It rents specialized NVIDIA GPU capacity to AI labs and hyperscalers. So when the AI demand exploded a few years ago, the big tech and the hyperscalers couldn't keep up with the demand. They didn't have the specialized capability to put together data centers and GPUs in place to train their models. That is where NeoClouds like CoreWeave came in, and they said, we'll do the dirty hard work at a fraction of a price. They undercut their competitors by more than half the price, as you can see here, and they were absolutely fundamental to all the growth we are seeing right now. So what's the problem? The leverage that they took on to do all of this is the big problem. Their total debt is sitting at about $25 billion as of now, and it was ramping up very quickly from 8 billion to 14 billion to now almost 13 billion, and it has been escalating over the last few quarters, and we're projecting 2026 to be closing at above 30 billion plus. And the repayment of debt might be a problem, but the bigger problem is that they have to pay 2.1 billion a year in servicing that debt. And if that wasn't enough, let's add more fuel to the fire because the debt keeps going higher. The guidance, as I mentioned, is above 30 billion on the year. And this is just one of those businesses that require a lot of heavy investments to keep on going. So let's hope that the growth continues at a faster pace than the debt escalates. So let's move on to the next thing. We also have a margin and depreciation problem because just like your iPhones or your laptop that require to be replaced every 2, 3, 4 years, same goes for these NVIDIA GPUs. The products will depreciate and they will need to be replaced over time. But if all that is true, then why did the stock hit $153, $155 a few months ago? It's because the demand is also accelerating. If their debt was going vertical, so is their demand and their growth. They have about $100 billion in backlog contracts. As I mentioned, two of the bigger contracts came from Meta, which was about 21 billion, and then OpenAI, which was about 20 billion. So if the backlogs do convert, this stock is actually cheap right now. So the prices we're at right now will reverse and the stock will continue higher. But that's only if the backlog converts, and that is a big if. And as much as I want to be bullish on this stock because everybody that I know wants to be long and scale into these AI companies, their biggest problem is Meta right now and other hyperscalers. When your customer is becoming a competitor, you got big problems, right? If I was in a business and all the hyperscalers are also trying to jump in the same business that I'm in, I would be very worried because they got too much money and they got too much access and they will somehow put me out of business. And that is what's happening to CoreWeave right now. Meta is crossing to the other side of the table, and Meta is now launching Meta Compute to sell its own GPU capacity to outside developers. Now, this sends two messages. One, that we might not need as much compute power as everybody's talking about. And second, hyperscalers such as Meta would want to sell that capacity out to other developers. So their top customer is now all of a sudden becoming a supplier for the same product that they were producing for that customer. And Meta is just the start. You can see that happening in XAI SpaceX. They have leased their GPU capacity out to Anthropic and Google. You can see that Oracle is building aggressively into the AI cloud capacity. AWS, Azure, Google, they all will follow. Why would you rent a product that you can build in-house for cheaper, right? So with all this risk, all of this volatility, things that you cannot predict, you can kind of just take guesses on. There's one thing that is absolutely locked in, and that is CoreWeave's debt. They have to make those payments. They have to pay their servicing costs. And so far, the story is good. The debt was needed. GPUs will get depreciated. The customer is there. The backlog is there. but the uncertainty comes from the renewals of those contracts and what will happen in the future. So stock is just trying to figure all of that out. And here are three more smaller risks that could turn out to be some pretty big problems in the future. Number one is customer concentration. As I mentioned, Meta and OpenAI make almost 40 billion of that backlog. The GPU treadmill, which basically means the depreciation of their GPUs, we'll have to see how that turns out. And at the end, the dilution of share count. So we don't know how much offerings they do moving forward to service their debt and whatnot. So you could become the exit liquidity for the stock. For example, let's say the stock reverses back to 150, 130, and they have to service debt. They can dilute their shares, create new supply, and dump it at open market. So that is another issue with companies with high debt. So before we get into the technicals, let's talk about one last thing. This is just one of those stocks that has so many different outcomes, and that is why the risk reward is so high, right? In a bear case scenario where hyperscalers do create in-house capacity, the stock might come crashing down to $20 to $30, but that is only in case hyperscalers do build their in-house capacity and there are no renewals, they have too much debt sitting around, and in that case scenario, we got problems, right? In a base case scenario, let's say the backlog does convert, and this is where the risk reward comes in. The higher the risk, higher the reward. The shares jump to about $160 for fair value, and the free cash flow has to turn positive for that. And in a bullish case scenario, this is the big one. GPU scarcity persists into 2028. I made a video about Micron and I was talking about this, that we don't know how long we're going to have these shortages on the chip side, so only time will tell. So with that being said, let's jump onto the chart. But before I break down these technicals, I'm going to show you the upside move that I am predicting and hoping for. But for this to happen, the fundamentals have to stay strong. And as I mentioned, the upside is pretty good on this stock, but that only happens with a lot of risk. So there is risk embedded in this setup. I might not even take this trade, and if I do, I am 100% going to have a stop loss on this stock. I'm not letting my capital sit in a stock like this where I don't know what happens in 27, 28. So let's jump onto it, right? The first thing I wanted to draw is this line from this weekly bullish candle. The bottom of this wick is sitting at around $63.80. So let's just say $64. I noticed that we tried to retrace into it. And of course, because of such a bullish price action, the market found buyers and the stock reversed back up again. We retraced into this zone again and then ran back up. And notice that we created a little bit of a double bottom here. And if you do watch my videos, you know that I always look for these liquidity sweeps. So we swept that level, created another bullish candle. So this shows me that the buyers here are willing to hold it again. And then the stock goes higher, gets rejected, and now we are sitting right here. When I'm looking at this chart, I'm thinking most people would love to see this support hold and we don't flush below $64. And just because of that exact reason, I believe that we will flush below $64, and either we pull a liquidity sweep here and reverse right back up, or you'll see that we come back up, retrace this level, maybe a little bit higher, and then come back down towards the previous lows. And that is if the fundamentals do deteriorate. Another thing I want you to notice is that we have this downtrend which finally broke out, and now we are retesting that level. So if we retest this previous line on the downtrend and then sweep these two levels, then it gives a very good area for institutions to come in and buy their position in large size, because all the stop losses will go off. People who've been holding this stock for the upside will exit, and people who were trying to take a swing trade here by putting a stop loss under the previous low will also exit. And in that supply and demand mix match is where you'll see all these exits happening, and it creates an opportunity for institutions to come in and purchase all those shares at a very cheap price. Now I say cheap price only if we reverse back to the upside. If you're trying to buy this stock right around the support area, I'm here to tell you that I doubt this holds, and if it holds for you, good. I won't be taking this trade, but if you do want a very good chance at a high risk reward ratio with a bit of a tighter stop loss, then wait for it to flush under 64. You'll see a massive panic event type of situation. Twitter will be going off on these stocks. You'll see the SPY might even turn it around. And by the way, watch out for my SPY video that is coming up in a few days or maybe a week or two, where I do see a correction that is coming up in the broader market, and this might even align with that. So let's see where that leads. And with that being said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.